Hello and welcome to today's lesson. I'm your hard-working but indefatigable teacher, Mr. Burton. You will need to watch this video and take notes as you go. You may need to watch certain parts of the video a few times to ensure complete understanding. This is your homework and I will check your notes tomorrow before we get started. I hope you learned something.
Hello and welcome to today's lesson. Today we look at how GST is entered or posted into the general ledger. So all we want to achieve at the end of today is to be able to post the transactions to the general ledger and including GST with those transactions where that is relevant. One thing and one thing only. It sounds easy. And it might be if you listen up. So here we go, the General Journal and GST. On January the 1st, the business sold goods for cash, $575, and it must have charged GST there. So, two questions. What is the GST exclusive price? And once we can figure that out, we know how much GST the business has charged. Right, if we divide by 1.15, 575 divided by 1.15, our magical figure, the GST exclusive price is 500, which means that $75 GST must have been charged on that. So we can work that out by 500 times 0.15, or just a difference between the two, 575 minus $75. Right, here we go. The accounts, and of course whether we're going to debit or credit. We sold goods, so our bank's going up, bank being an asset, and we're going to credit sales, income going up. So here we are, January the 1st. We have got our transactions here. So our bank, we debit 575, sales of 500, and GST 75. The full 575 is debited to the bank because our bank account will increase by that much, but we've only really made sales of $500 because that GST component is not the business's money, it belongs to the government. Okay, and from the journal, we now have our instructions for posting to the ledger. Ledger accounts. We have bank, sales and GST as the entry, 575. Debiting bank means we got the left hand side of the bank account and write that entry. Sales. We've only really made that $500 of sales, as you can see in the journal. Crediting sales. And we have a ledger account called GST. So we've got to credit GST. GST is a liability. That liability is increasing. That's $75 extra that we now owe to the government that we didn't before the sale. Credit GST means we got the right hand side of the GST account and put in that entry. Bank is the cross reference here. So sales and GST 575, debit, bank 500, bank $75, the two credit items. Bought goods on credit for $460. GST exclusive price, how much GST did the business charge? The two questions that start us off. Right, if we divide 460 by that magical figure, 1.15, we end up with $400. That means $60 GST must be charged on that item. What are we debiting? What are we crediting? Purchases are increasing. That's a debit. Accounts payable, liability, that's increasing. So purchases are $400 including $60 GST, and we have an accounts payable of $460. So our journal, we've got purchases of 400 and GST of 60. So with total purchases of 460, and 460 is what we owe in addition to anything else we had in our accounts payable. Posting to the ledger accounts, we have got purchases 400. We are debiting purchases. We've got the left hand side of the purchase account to write that entry. Accounts payable being the cross reference. GST is included in the purchases, so GST is on the debit side as well. And our accounts payable include purchases and GST, $460. That liability has increased, $460. Must be credit.